The market slices through our pivots, putting the bullish potential on hold for the moment. Is this the end of the bulls? Find out next on Invest with Jacob. Okay, guys, so the bulls started off strong on Friday, coming down to test our micro pivot perfectly and then launching higher. However, they were unable to break out and then collapsed down below our pivot, which invalidated the immediate bullish breakout potential. After that, on Sunday, they fell down below our major market pivot that we had as a must-hold point, and now we have to wonder if the bulls have any bullets left. I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, quick housekeeping note. I am traveling at the end of the week, so there will be no video on Friday. And I do apologize. There's going to be a lot of information in this video and a lot of fib numbers as the market has some uncertainty in it. So you might want to take notes if you're following along. All right, let's jump into the charts and take a look. Okay, guys, so here we are on the 1-hour future chart for the S&P 500. As I said, we are going to be going through a lot of fib levels here as we are at a level of uncertainty. I have our most likely bullish path marked in blue and our most likely bearish path marked in black. So we're going to start with the bulls. And as we discussed last week, if the pivot did break, our most likely bullish path at that point would be that the top here was all of wave 1, and we are pulling back in wave 2. Now, if that's going to be the case, the bulls need to find support anywhere from 43.66, which they just hit, all the way down to 43.03. A standard wave 2 can pull back as deep as the 764. However, that's going to be a little deeper than the structure is going to allow for the targets higher. So I think the 618 needs to be kind of our must-hold area for wave 2, which is 43.03. So right around 4,300, we need to hold wave 2 and then start a 5-wave move higher. Now, if this is what is playing out, okay, wave 1 of 3, which is what we would start up, targets the 0.5 to 0.618 extensions of waves 1 and 2 here. So we take our trend-based fib extension tool, we draw it from the bottom up to the top of wave 1, down to the bottom of wave 2, okay, and that gives us our extensions higher. And so I have that drawn from the 618 fib right here, and assuming we hit 43.03, we would be targeting 45.68 up to 46.30 as our wave 1 of 3 area. And that's going to be important because that's going to be higher than what we would expect this wave 2 here to be. And we'll get into that in just one second. But those fibs are going to be important to know. If we pull back to 43.03, we're looking at that 45.68 to 46.30 level for that wave 1 of 3 higher. Now, that is based on this coming down and hitting the 618 exactly. Where this bottoms and reverses, if this is the pattern that's playing out, will dictate exactly what these levels will be up here. So these are going to change a little bit depending on where this bottoms, unless it hits exactly 43.0350, and then those are the exact numbers we're looking for. Okay? So that's what the bullish potential looks like. It looks like we need to hold 43.03, bounce higher towards 45.68 to 46.30, okay, in a 5-wave structure for wave 1 of 3, and then pull back in 2 of 3, and then go back higher and take that out, and we can be very confident in the bulls again at that time. For the bears, okay, the most likely structure I have here in black is that the move down here where I have the 4 and the C and all this stuff, that this is a wave A down, and this bounce got to be so high that it's a wave B. Okay, so you have A, B, and then you'd have C down here towards the 4,000 region. So for that, we'd be looking for this wave 1 to bottom here at any time in this area, and then bounce, okay, for our wave 2 of C higher. All right, and this wave 2 is important because it's going to target the 44.93 up to the 45.66 area. And you'll notice that the 0.5 and 0.618 are just above that 764, and we know that if we're going back higher and we take out the 764, then it becomes more likely we go back and over this high, which is what we would look for. So this bounce here is going to be extremely important should we get it either for this wave 2 off of, I should say, off of this wave 2, okay? If we get the bounce off of that, how high it goes is important, or if we get it as off of this wave 1, how high it goes, because these fibs are going to tell us kind of which count we're in if it's one of these two counts. So if we get a bounce up to 44.93 to 45.66, then it's very likely we're in the bearish wave 2 scenario. If we get a bounce up to 45.68 to 46.30, depending on what those numbers end up being exactly, then it's more likely we're in the bullish blue scenario. So again, a lot of volatility ahead, a lot of what ifs, because we're just in an uncertain zone. We're in a pullback that can be a major pullback all the way down to 4,000, or a minor pullback that bounces and starts the next move higher. So we want a little bit more clarity in the market. And of course, there are some curveballs we can be looking at. So what are those? Well, the first curveball would be that this move down that I have in this blue A would actually be this 1 in brackets here, and this B would be wave 2, and we would be in this wave 3 already. At that point, we would be looking for a direct move lower, okay, than 43.03. That kind of throws our wave 2 bounce scenario out of the window and makes this wave 1 too long. So at that point, we would be looking for that to be our confirmation that we are already in wave 3 and moving lower, instead of trying to bounce up in wave 2 and then come down in wave 3. So again, that alternate is, this is A is this 1 right here, this bracketed 1 would be up where this A is, and this bracketed 2 would be where this B is, and then we would already be in this bracketed 3 here down towards about 4,100, okay? We would retest this low and likely get a bounce in wave 4 and then a move down in wave 5 towards about 4,000. So again, that scenario is confirmed with a move below 43.03. Now, the final curveball is that we're going to try to track a diagonal up higher and make a direct move higher from where we're at. I have very little faith in this one, but I am going to put it out there in case you get a 3-wave move that takes out this high. That is a possibility as well. So as I said, guys, we're in kind of a no man's land of what exactly is happening. This happens in the market, and this is why when you're trading, these are times to sit out. You don't have to have an active trade. No trade or cash position is a position. So be smart about this. Understand there's likely some volatility ahead here, and we have several different ways to get where we're going, and both bulls and bears have a path here. So that is what we're looking at on the S&P 500. Over on the NASDAQ, it's a little bit easier of a setup. The NASDAQ had broken lower a while ago, and we had assumed because it pushed to the 2.0 that this was a wave 1 here, and we've been looking for this wave 2 support to hold. And so basically we are looking for 13,491 to hold our wave 2 support. And technically, guys, we know that you can have a wave 2 lower than the 764 as long as it's above the bottom here. It can be a valid wave 2. However, when we break the 764, it becomes very likely we go down and test this bottom and very often break the low. So we would really like 13,491 to hold as a wave 2 here and then get a bounce up out of there. Otherwise, if 13,491 breaks, then it becomes much more likely we're heading down in this C wave, as we would have A down, B up, and then C down here to complete this wave 4 down around the 12,500 to 600 region to complete that overall correction. So looking for 13,491 to hold on the NASDAQ as a bouncing level. We can bounce below that, but it becomes less likely as we break the 764. And if we don't hold that area, we look to make a new low in that wave 4 down on the NASDAQ. Guys, if you like this video and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it will take you right over to the website. Once you get there, check out our membership plans area. We have 2 amazing plans, and they both come with a 7-day free trial because I want you to get in there, experience it, understand it, make sure you love it, and become part of our trading family before you ever spend a dollar. We have 2 incredible rooms. The first is my Invest with Jacob room. In that room, you get all of your Elliott Wave questions answered. You get my real-time market updates as well as my buy and sell alerts. We do trade the SPY and the QQQ in that room, and we swing trade, which means our trades last anywhere from a few days to a few months. Okay, so we don't day trade in there or trade at that kind of frequency. However, if you are looking for day trading as well as individual stocks, you need to check out PT's Throne Room. In his room, you get everything you get in the Invest with Jacob room, as well as day trading, individual stocks, and PT's reduced risk binary trading method that is so powerful, you really need to check it out to see how it works. It's really incredible. I think you're really going to love it. He's one of the brightest minds in the stock market. He understands the levels very well and how to trade off them, and he is super successful at what he does. Okay, guys, so we would love to have you come in there, check out the 7-day free trial, and let's make some money together. All right, key takeaways for today, guys. There's a lot, okay? That's all I can tell you. There's a lot to watch for. Right now, we have a possibility that we are in a bullish count where we're looking for wave 2 support above 43.03. Below that, it gets just a little bit too deep for the bounce to occur and keep the targets higher. So looking for a wave 2 bounce from there up to roughly 45.68 to 46.30. Again, these levels can change depending on where exactly we see a bounce, if we see a bounce. Also looking for the potential that we are in a wave 1 of C lower where we get a wave 2 bounce. And this bounce is important because it will be shallower than the wave 1 bounce should be. And it should come in at the 44.93 to 45.66 level and then proceed down from there. A couple twists and turns could be that this was already 1-2, this AB, and we are in 3 as we speak, and that would be targeting 4,100. And that would be evident if we make a direct move lower here through 4,300. If we continue this move down through 4,300, then it becomes more likely that we're already in 3 and looking to test this 4,100 level, okay, and likely bounce somewhere around there up and then go down to 4,000 to complete that wave 4. And then the final curveball, which I have very, very little confidence in, but it is still possible, is an ABC move up as an ending diagonal for wave 1 to a slightly higher high here, and then we see a wave 2 pullback. Okay, over on the NASDAQ, we're looking for support to hold this wave 2 pullback at 13,491. Okay, if it can hold wave 2 there and bounce in a 5-wave structure, then we would be more confident that the NASDAQ is in wave 2, has bounced and moved up. However, if it does break that 13,491 level, then it becomes much more likely that we are coming down and making a new low in the 12,500 to 12,600 range on the NASDAQ. All right, guys, that is the market update for today. I will talk to you tomorrow.